Hi, I'm Christian Easterday. I'm the CEO and Managing Director of Hot Chili Limited, one of the ASX's leading advanced copper developers, developing a very large coastal production hub on the Chilean coastline, something that's been in the works for over a decade.
Christian, good to see you again. It's been a while, and what a time for copper at the moment. Look, I think it'd be remiss of you not to claim that your company's undervalued, and we're going to talk about that today because I need to understand why. So, what do you think investors are actually missing or failing to recognise?
Look, I don't think they're missing a lot. I think that the company's share price and market capitalisation are performing very well. We've re-rated a 4x, 5x over the past 15 months, but certainly bridging the gap with our North American peers in the large-scale copper development space. I think that what is quickly becoming apparent is that our new discovery at Verde is transformational for the economics of this project and how it positions against our peers.
But if you look at, what peers? I mean, if I look at Chile as a jurisdiction, obviously it's number one because of copper jurisdiction in the world. Do you feel that you've got something more than they have? Are you concerned about grades? Are you concerned about raising capital? Are you concerned about permitting? I mean, what are things that kind of you do have to focus on to kind of keep driving that kind of value accretion?
Look, it's a story that, as you know, Matt, started in the last copper cycle. I founded the company back in 2008. We listed in 2010. Back then, we made our first discovery on the coastline called Productora. It was some 250 million tonnes. We were one of the few copper developers that actually made it through the downturn. We were able to transform the company with our second edition, Cortadera, which built this production hub we call Costa Fuego on the coastline. And now moving into this copper cycle, where we've seen copper prices improve from $2 towards $6.50 a pound at the moment, hitting all-time highs. We are firmly positioned with one of the top 5 by-scale independent copper developments left in the world, down on the coastline, and moving into our execution phase. We're about to restate our pre-feasibility and dramatically transform the economics of what we have by integrating that third major discovery, which will also position the company with one of the few tier 1 undeveloped copper resources in the world. So look, everything to play for at the moment, as we have always been trying to bridge this arbitrage gap in valuations between our North American peers and between an effectively Australian listed copper developer. We have no peers on the ASX. We've been the largest copper developer for quite some time, which is why we opened that secondary listing on the North American market through our TSXV listing. So that long strategy to re-rate the company and to bridge that valuation gap is well underway.
But I'm trying to work out there has been a real change in the last 15 months, and has that come from like adding La Verde, and we talked about the Huasco Water project as well along the way, or is it copper price? Because I think previously people were looking at the kind of NPV for the Costa Fuego project and going, well, perhaps that's a step too far. So what exactly have you been building to kind of change people's perception?
Look, I think this game in large copper, it's always been a scale game. It's about making sure that you have that critical mass. Costa Fuego had grown to 1 billion tonnes. It was positioned in the ASX against a grade which is not typical of developers on the ASX. The ASX is typically a grade-based market. And so this change now to copper overtaking iron ore as the number 1 metal market in the world. The education on the ASX is starting to change, much like it did with iron ore and lithium. And now it's starting to focus on copper. And we don't have a lot of copper developers on the ASX, and we certainly don't have any copper developers that are advanced with this kind of leverage and exposure to the metal. So quickly, what we're starting to see is that the ASX is starting to improve its knowledge bank around what is arguably going to be one of the key metals for the next 20 to 25 years, moving into this cycle. And so therefore, they're starting to look at who has that direct exposure. So Hot Chili is going to be a recipient of that. So you ask, what were the ingredients to take the stock in the past 15 months from 42 cents to $2.10 and sitting at about $1.65 at the moment on this recent risk pullback? It has been copper price. It has been that second discovery, Verde. We've seen our trading performing very well against the numerous world-class results that we've been putting into the market. It's also been about our financing strategy. Earlier in the year, we were able to secure a very well-supported institutional funding of $40 million, backed by quite a number of funds out of North America and Australia. And then recently, the significant, endorsement by second major investment from our friends at OR. That's positioned the company in a very strong cash position. We have around $46 million in the bank. This is a very aggressive year for the company in terms of our spending. Some $60 million is going into the ground across development, EIA, and resource activities. So we have a healthy amount of news flow. And that's also supported by some major changes that we've made to our organisation. Firstly, from the board perspective, bringing on Stuart Matthews, Executive Vice President of Goldfields for the last 13 years and 5 major mine builds under his belt. We brought on the expertise and the capability to move this company firmly into its execution phase. And that is a major de-risker for the market, and it shows the intent of what we've been working 18 years towards. And so we're seeing this re-rate in Hot Chili as being the culmination of many factors, not just the copper price, which is obviously news to our music to our ears.
Okay, so you used a few phrases in there, like this, addressing the kind of development aspects, and I'm interested as to what, because ultimately I've got to work out what I'm investing into. There's a PFS on Costa Fuego, I get it, but it's still several years away from getting into production. Is this the vehicle that's going to do that, or is it really a case of kind of building up, the credibility of the story for someone with a bigger balance sheet? What exactly am I investing into?
I think you're investing in one of only 5 copper developers that are in independent hands and not controlled by a major, that have projects that are over 100,000 tonnes of annual production capacity. And so when there's only 5 left and we're in a very hot M&A market, investors are looking at the potential for the company to be a target. And certainly we are advancing on a strategic funding process with BMO leading that and seeing a significant amount of interest into the company. And that's one aspect to it. But when you have a company that is sitting at a 300 million market cap and is 2.5 years away from having an FID on a project that is scaled larger than the last mid-tier copper producer of the Australian market in Oz Minerals, that was taken over for around $10 billion with a production capacity of 120,000, for an Australian-led company to come out with a project that's heading towards 150,000 tonne annual production base. That's pretty unique. There's only 5 left in the world that sit in that basket. So I imagine that we are certainly, getting a lot of attention just by the fact that there is very little supply coming, very little supply of meaningful scale from the independent space, and therefore we are part of that focus by investors as to who is the next major new supplier to come from from outside of the majors, or who is going to be the next transaction data point.
But break that down for me, because look, Costa Fuego is a 1.2 billion post-tax NPV8 project, albeit with a 1.2 billion startup capital requirement to it. You've added, it's people have got to take a view on that, your ability to execute and deliver on that one, as you're starting to describe here now. But Verde, when you look at, you're saying 300 million market cap, where's that value being attributed to? We've seen people like Marimaca benefit from new discovery, new acquisition, new discovery, with not necessarily through the development components of the project. How do you think people are valuing it? How do you think they should value the different components of the portfolio?
Sure. Look, valuations in the market are actually, fairly simple to determine. In terms of in situ value and obviously using modifying factors, we want to talk about reserves rather than resource tons in the ground against the market cap or the enterprise value of the company. So within our recent corporate presentation, there's a couple of very key slides. The first one is market valuations of large-scale copper developers. So these are copper developers of significance, of meaningful scale. And when we look at that peer space, what we see is that crowd over time, is trading at about 11 cent per pound reserve from our peer space. Most of those are in North America. Hot Chili is currently trading at about 3.8 cents per pound. So there is about a 2.9 multiple of opportunity there for the company to re-rate in and to continue that re-rate. But of course, when you're adding something of the size of Verde, and we'll get to that shortly, turning 1 billion tons into 1.5 billion tons, you're about to meaningfully increase that re-rate opportunity in terms of in situ value. The second valuation slide I'd probably turn your audience to is the actual transaction values. These are the values that are attributed to transactions in the market. And what we've been seeing in that space over the 2-year window or 3-year window that slide displays are all of the transactions in the copper space and the increasing proportion of net asset value that's related to those transactions. And again, we see that the P/NAV ratios are starting to really increase, particularly in the last year. And we put copper price as a backdrop because, of course, copper price is the incentive that means that there is more attention on the remaining assets that are available outside of the majors, and therefore the transactions are heating up and the valuations that the counterparties are paying for those are also heating up. So when we look at the P/NAV ratio against what we trade at, again, we see about a 2.3 multiple opportunity. What the bigger opportunity for Hot Chili is when we turn to slide 7, where we can see the location of our 1 billion ton coastal production hub in red, sitting down at low elevation uniquely. It is very rare to find a project of this scale sitting down on the coastline in the number one country in the world for copper, which is Chile, and sitting on the Pan-American Highway next to port. But it is even rarer when you can add a major third bulk discovery 30 kilometers to the south. Now that discovery, Verde, is shaping towards about a 500 million ton resource addition. And it's what it does to the pre-feasibility economics of some 16 months ago that really starts to show you the opportunity that the company is very aggressively pursuing by being able to integrate a first resource into our resource book and by being able to integrate that into our mine plan. And we talk about the economics of a pre-feasibility 15 months ago, and we can move forward into a couple of slides. Firstly, slide 14, what does that do to Hot Chili's resource base? Well, that moves us from about the 10th largest undeveloped resource in the world in the independent space to about 6th. And that milestone or that catalyst is coming towards the end of the year. And you can see on that list of all of the largest undeveloped copper resources, virtually we are one of the only Australian representatives at that table. And nearly all of those projects are domiciled in South America and then to a lesser extent, North America. But when we go to the project economics that we outlined in the pre-feasibility on slide 16, we're looking at a pre-feasibility that set a 20-year mine life project for a top tier or a top quartile production capacity of almost 120,000 tons of annualized copper equivalent production. Most of that is copper. And that was sporting, as you said, a 1.2 billion US NPV and a post-tax IRR of 19%. And importantly, all of these are post-tax numbers. But it was offset against that $1.3 billion US capital. Now, that produced a bottom quartile capital intensity. So what that tells you is if we were up with our neighbours at 4,000 metres altitude or 3,500 metres altitude, we would probably have a project that would cost us about $2.5 billion US. So it's about half price already. But as you say, maybe the 1.2 billion profit against the 1.3 billion capital, sporting a cash flow index of around 1 on that ratio, that's something that is always going to be a challenge. These are capital intensive projects. It's why they take 21 years on average to go from discovery through to production. So we're tracking very well on the timeline to bring a major asset into production. But importantly, look, these are capital intensive propositions. So to be able to look at the integration of Verde and say, what does 5 years of higher grade feed inserted into the front end of the economics look like? And when we're running numbers and seeing the post-tax NPV increasing from 1.2 billion towards 2 billion, and this importantly is without moving metal prices, leaving them where the long terms were 15, 16 months ago, and they're appreciably higher. And it moves, NPV post-tax from 1.2 to 2 billion, IRRs from 19 towards mid-30s. Then you're starting to approach ratios of around 2 to 1. And that becomes very, very attractive in this space. I would probably argue to say that that's probably some of the most attractive economics in the large-scale copper development space. And so when you get a second bite at that leverage equation, and leverage firstly about what does Verde do, and probably the most important factor it does is bring that payback period down from 4.5 years towards 2.5 years. And it brings the operating cost probably from 138 per pound just in the second quartile, actually into the first quartile of cash cost. They are really superior economics. Then you layer metal prices over the top. So we've seen a very, very sharp increase in long-term consensus copper and long-term consensus gold. From the numbers we were doing 16 months ago at $4.30 per pound, we're looking at close to $4.90 per pound long-term consensus on copper. And what that does is give us a 600 million US post-tax NPV free kick. And that's without touching gold. Gold was done at $22.80 per ounce back 16 months ago. And currently long-term gold prices by consensus are around 3,600. So that's only a 30% increase on 10% revenue contribution in this project. So this project, as you can see, by the end of the year, with the new resource base, pushing it towards that 25 to 30 year project, as we can see outlined on slide 15, that larger and expanded production hub. It's starting to position Costa Fuego as really probably the next Equinox of the Australian market, or next Oz Minerals of the Australian market, or indeed even before that, the last major of the Australian market in Mount Isa Mines before it was taken over by our friends at Glencore. So to be having your hands on one of only 5 assets in the world in this scale range, to be transforming the economics towards a production hub that is capable of putting out close to 150,000 tonnes per annum of copper equivalent metal. And you've got to remember that's annual revenue streams of over 2 billion US on a project which is heading towards a 30-year mine life. This becomes a very important asset to the global supply pipeline coming outside of the hands of the major miners.
Okay, so I hear what you're saying with regards to the numbers, but it kind of critical part of this seems to be, what you're able to do with Verde. And you talk about this kind of high grade starter can, whilst not essential, can dramatically change the kind of early years of the project. resource is coming at what, end of this year? Is that what you're saying?
Correct. Yes.
Right. Okay. So in terms of what work needs to happen there, and what the timeline is to actually wrap some economics or put some material numbers around how you get that out of the ground, and what the recoverables are, what the payables are. What's that look like?
That looks like a hell of a lot of work from our entire team. So as I said, this is probably one of our biggest expenditure years in the company's history. Around 60 million is going into the ground. We've got 46 in treasury after that OR transaction. So we're well funded to execute on this entire plan, which is about delivering the maiden resource on the Verde. We see that first resource approaching 500 million tonnes as a first estimate. The all-important high-grade component of that is what we're really focused on. And following that, we will be restating our pre-feasibility. So that restated pre-feasibility will incorporate updated capital and operating numbers, an updated price deck, but importantly, an updated mine plan with Verde integrated into it. And so that is what the company has been doing extensive impact modelling on, and iterations of where our block models are going. We've got 3 drill rigs on the ground at Verde, a 4th arriving. We've got an entire development team working with the Senko on that revised pre-feasibility, and in the background, all of the work that has also gone on since the completion of value engineering towards the ongoing feasibility study. But importantly, as this outlines on slide 15, probably the last of the 3 catalysts, which is the submission of our environmental, our EIA, our environmental impact assessment, that will follow that restated pre-feasibility. So rather than the company focusing on a resource, working quietly in the background towards a feasibility over 2 years away, and then inserting Verde to look at the impact, what we've decided to do is to restate that pre-feasibility, add Verde now, and dramatically change the net asset value for Costa Fuego. And the reason why we're doing that is because, of course, in the background, we are engaged in a strategic partnering process being led by BMO, and strategic partnering process which is looking to focus on the asset value. At the moment, we can demonstrate, as you said, a 1.2 billion US post-tax NPV. We're hoping to, in the early stages of next year, be able to double that. So that doubles our negotiating position. If we go back to those valuation slides, it turns 2.9 multiples on in-ground pounds. It turns that on its head and raises that valuation ceiling for our shareholders that we can tackle. And more importantly, on a PNAV basis, the basis for which we're having advanced discussions with parties, it doubles that. So that's really just about being very smart in terms of our final run-up towards FID and ensuring that our execution phase has all of the numbers in the market to benefit our shareholders as we approach that final investment decision in 29.
Okay, so we're seeing that kind of confluence on those projects. The water component, I don't know, we've talked about in the past the potential of this thing could be huge for you guys. Is that factored into, or going to be factored into any of your numbers, or does that sit as either standalone item or something that's just going to come further down the line? How do I value that component?
Yeah, look, it's something at the moment that we're quiet on. We have been very, very clear to the market, and probably the slides in the back of the current presentation on slide 22 probably outline the position of Huasco Water. Look, we have a major strategic asset in that we have one of the largest clusters of undeveloped major copper projects in the world, controlled by some of the biggest names in the business, and Hot Chili has the only maritime license in the Huasco region. So with neighbours such as BHP and Lundin developing Vicuña and having really only alternate water solutions that have to take water all the way from Copiapó at probably capexes of twice or more than the pre-feasibility we put out on Huasco Water some 16 months ago, and at levelized water supply rates of over twice what Huasco Water can provide. The Huasco Water potential multi-user water concept for this region is strategically very important for all of our neighbours. So we've been having discussions with all of those potential off-takers and covered by NDAs on most of them, and we've also been having very fruitful discussions with the major water investment community on this asset. So this is something that we've been developing in the background. We've been very clear that the current maritime license we have was for stage one. And stage one is, on slide 23, is seawater supply to Costa Fuego. Our deposits are very, very fortunate that we can process our ore bodies just using seawater and getting about 2% better copper recoveries, like some of the other coastal copper deposits that are well known, such as Centinela by Antofagasta, Justa up in Peru by the Minsua guys. These lower altitude deposits often can process with better recoveries using seawater. So that is a big benefit to us. In the background, we have had a second maritime license that's been advancing very well. And if we go back to slide 22, it's helpfully coloured up as stage one in green, seawater supply to our project. But stage two is all about desalination, to unlock all of these mining assets that are looking to either expand or build, and to also potentially supply water to the communities of the Huasco region on an industrial scale. So benefiting all of the regional townships, benefiting the agro-industrial players, and that is all premised on Hot Chili securing its second maritime license, which has been some 5 years in the making. Both of these projects, in terms of our copper project, Costa Fuego, and our water project, Huasco Water, were given priority status or projects of national significance by the Chilean Ministry of Finance last year. And that means that we're in line to be fast-tracked for streamlined approval. We've just recently, in the last month or so, had contact from the government where they contacted us to ensure that the delay, the minor delay that we've seen in that application, and we were expecting that in Q2 of this calendar year, for us to hear about the advance of that second license. The government contacted us to assure us that license application was advancing well. There had been a delay with the change of government earlier this year, but it was on track. We are expecting to see that second license hopefully approved or to have feedback on its approval within the coming months. Once we have that, I imagine that will unlock the commercial discussions between the off-takers and the potential major investors for Huasco Water and setting up a potential multi-generational water business for the Huasco region. So it is certainly something that hasn't surfaced in value in Hot Chili. It is a huge blue sky opportunity for the company because it relates not just to the valuation of Hot Chili itself, but it speaks to the ability for Hot Chili to be able to fund the development of Costa Fuego without significantly diluting our shareholders. These are strategic assets that the entire mining community in Chile is now beginning to monetize and outsource. In fact, we were flattered by BHP and Lundin's PEA that came out a few months ago that effectively copied Hot Chili's blueprint for outsourcing its potential water requirements in the future and allowing a third party to finance and build it and supply water to Vicuña. Very, very coincidental, I guess, to the concept that Hot Chili is talking about here. So it's certainly something that the mining industry in Chile is doing to address increasing capital intensities and to be able to monetize those assets and take on that cost as an operating cost rather than a capital cost. So certainly there are a huge amount of interested major industrial players in Chile that are looking for these opportunities. Huasco Water is one of the pin-up potential multi-user regional water businesses that's available. And so we believe that that next catalyst, achieving that second maritime license for a dedicated desalination water business, will be key to surfacing value for our shareholders on that asset.
Okay. Does your project work without it?
Our project works without it because we have a maritime license for seawater supply. We already have that. It's baked in.
Okay. One other thing that all CEOs must argue, other than they're undervalued, is that they're going to build this thing out, and you made reference to that. What's the reality of you being able to do that in terms of a financing stack? I know you've hit upon some of those touch points here, but if you could sort of summarize it in one that you think HHLKF could finance a startup project. Sure,
I think that that the market always questions a junior's ability to finance any large project. That comes with the territory. That's what every CEO taking on something ambitious has to be able to have a strategy. I've just very, very accurately outlined our strategy. We have a major strategic asset in Huasco Water, and we'll be looking to monetize that to secure much of the equity side financing of our copper project. If you have $600-700 million of equity already taken care of, and you haven't had to issue many or any shares at all, then you've effectively accounted for the dilution equation as to why most CEOs are not taking on big, ambitious, capital-intensive projects. Getting the debt side is very easy when you're sitting with the entire equity side covered. So, yes, in a nutshell, Matt, I believe that financeability is tied to this strategic asset. And it's also tied to the fact that Hot Chili is not, at the moment, dealt many of its financing options. We haven't touched any forward sales of our precious metal credits, remembering, of course, 10% of our revenue will come from a very healthy gold credit. And gold production that 16 months ago in our pre-feasibility looked like 50,000 ounces of gold a year. And that's probably heading more like towards 70,000 ounces of gold a year, with Verde being included, which is, of course, a lot more gold rich. And we also haven't, touched our uncommitted offtake arrangements. We have Glencore as our largest shareholder. Glencore is also our offtake partner for benchmark term offtake on 60% of Costa Fuego's production for the first 8 years only. So we have a very, very large concentrate project with 40% uncommitted. At the previous scale, that would account for some 160,000 tons of annual concentrate, no arsenic, in a concentrate market which is forecast to be in deficit for at least the next 5 to 10 years. That is how tight the market has become. So all of these things are boding well. We are seeing a lot of interest from some of the biggest off-takers in the business in that uncommitted offtake, and none of that has been dealt. So all of our options remain intact, but importantly, the key differentiator with Hot Chili is we have a strategic asset that we don't see in any other project that has the capability to effectively allow this project to be financed.
What? Okay. Just finally, if I'm looking at sort of obviously copper is, in the headlines at the moment, but, for all the right or wrong reasons, depending where you sit, a lot of the majors are reducing their forecasts, production forecasts, not just in Chile, but globally. What does that actually mean for copper price going forward? We've seen it at sort of high sixes, 680, last week at some point. Does that start to really sort of change the sort of the future for juniors? Does it make it more realistic that you kind of move forward into a financing process?
Yeah, look, obviously the price and the incentive price, it's funny, Matt, we've been talking about this, you and I, for years now, right? And we've been waiting for this moment to occur. We've had a few false starts in copper and that has been disappointing, but the narrative has never changed. we've seen this supply issue coming miles away. But we've been talking about it for 5 or 6 years. The world has been predicting that copper would overtake iron ore. Now we're seeing the behaviour of the BHPs, the Rio Tintos, the Glencores. We're seeing the mega merger discussions, the Tech Anglo tie-up. All of this is centred around positioning for copper, positioning on how much market share each of those majors has got and how much market share they desire of that market. It's a 26 million tonne per annum fine copper metal market at the moment. It's predicted to be needing 35, and some respondents are talking about 40 million tonne market within the next 8 to 10 years. That's a lot of copper to produce. And what we've seen is an inability of the sector to be able to produce that supply response. We're already sitting at cutoff grades, sometimes towards 0.15%. And in some of the leaching projects, 0.12%. That's not a lot of copper left in the rock. So the previous copper cycle was able to use a lever which the industry has used each time copper has incentivized new production, and that is by reducing cutoff grade. We simply do not have that response on this cycle. And so the focus is now shifting to, well, how much scrap can the market supply? And when you're talking about a scrap market of around 4 million tonne going towards maybe 6 million tonnes, if we ease some of the conditions on scrap imports into some of the areas such as China, then the response isn't really going to come from there. And when we look at that chart that I showed with the top 5 independents holding 100,000 tonne projects, well, you group all of that together and you have about 620,000, 650,000 tonne response there. That's not going to cut it either. You look at the brownfields expansions of BHP and Chile, and you look at the work that Glencore is doing on the low-hanging fruit, and you're starting to see the easy low-hanging fruit response. And what we're actually seeing is that those majors, in many cases, are going backwards. And we're starting to see these supply disruptions actually more than accounting for the brownfield supply. So if you were listening to me, you probably haven't got to 4 million tonnes of new supply. I've just exhausted about 80% of the response. And so when that is the obvious situation going on here, and then we look at the demand side, and it is increasingly being pushed towards a world where electrification is going to be at the center of everything, whether copper is being used in the renewable sector, whether your flavor is talking about AI data centers and their rise at the moment, or whether you're talking about a resurgence of EV uptake in the world owing to the recent energy shock. All of these things are heading in the right direction for demand, and we're seeing that demand and that change of demand demography shifting towards, a slice of the pie graph which was sub 10% and is now approaching 20, and will ultimately probably represent about 30% of new demand demography. Now that starts to cannibalize the traditional demand area, and it's going to require a lot of new copper. And so projects such as Hot Chili and some of the other more meaningful projects, yes, they are going to be very, very attractive as part of the future supply response for copper. And when you have grades declining and continuing to decline, we're sitting on global production, which is around 0.5%. We're sitting on the top 25 projects by scale coming into the industry, which is closer to 0.4%. We're not finding the big discoveries. When we do, the average time frame is out to 21 years. This is economics 101. It's called inelasticity of supply response. And that is what is shaping for this new copper supply cycle that we're moving into, that is very, very different to what I've seen in the past and what the world has seen in the past.